Good afternoon, good evening, and good night, depending on where in the world you are joining me from. I am 𝐂𝐎𝐍𝐕𝐄𝐑𝐒𝐀𝐓𝐈𝐎𝐍, and this is the Crypto and Cognac podcast show, as always, live every Thursday evening, 7 p.m. sharp, right here on YouTube. Right? Before we get started, before we jump into the festivities, I want to say happy holidays to everyone celebrating a holiday today. Here in Trinidad and Tobago and in many parts of the world, we are celebrating Corpus Christi. But in Trinidad, we like to overdo. So we are also celebrating Indian Arrival Day. So shout out to everyone celebrating Indian Arrival. I think as at this point, all of us might have some East Indian heritage. So, if they didn't come, we wouldn't be here. You understand? And I wouldn't be here. So, shout out to that. Today, we are talking the calm before the storm. We are talking about this boring stage of the Bitcoin bull run. Right? Of course, as always, that looks like an empty glass. We should fix that. I am having some Hennessy VS today. Behind me, we have the Hennessy Spirit of the NBA Collectors editions for 2002 and 2003. I don't know how many b-ball heads I have in the audience there, but shout out to y'all. Who you all have for the NBA Finals right now? The Eastern Conference finalist has been set. Shout out to the Boston Celtic fans. Right now, we have the Minnesota Timberwolves fighting for their life this evening against the Dallas Mavericks. Who you all got? I know all you crypto heads are probably supporting Mr. Mark Cuban, but we will see. Right now, the series is 3-1. Kyrie and Luka gonna end it tonight, or aren't gonna keep the fight alive for the Wolves? I don't know, but we're gonna see. In the meantime, in between time, we are here to do what we have to do. And as always, before we get into it, we have to do some housekeeping, right? So I am not a financial advisor. This is not a financial advisory show, right? Nothing that I share here this evening or any other evening should be misconstrued as being financial advice. This is always about the ICE rule. Of course, information, conversation, education. I share with you, you share with me, and hopefully at the end of the time, we know a little bit more. We have a little bit more context as to what is taking place. So, shout out to my boy Steven, as always. Always. If nobody's here, Steven is here, repping for the Crypto and Cognac family. So, over the last couple weeks, since we did the episode on the 10K TT investment, everybody was expecting that 10K to become $1 million in 2 days. Clearly, you all have not been listening to what I've said here, but we're going good. We're moving along steadily. I'll give you an update on that at the end of the episode. But since then, everybody has been like, yo, what's happening? I'm not seeing anything happening. We just keep kind of moving in between 68,000 and 70,000, 71,000. I expected things to happen a little bit more since you guys said, the bull run is on the way. What is happening? What is taking place? Basically, why is it so damn boring in crypto right now? So I think it was important for me to address that and kind of for the new people to give you guys some context, to give you guys maybe some reference points, some historical context of what happens during an overall crypto market cycle, or any market cycle for that matter, and specifically talk a little bit about what stage of the cycle we are in right now, what can be expected, and what can be expected next, right? So first and foremost, we need to talk about market cycles, right? All markets, all speculative markets go through four basic parts of their cycle. We have the accumulation phase, we have markup phase, we have the distribution phase, and then we have the markdown phase. For those of you who aren't familiar with what those are, we're going to jump into it now, right? So basically, in the accumulation phase, we see prices basically stabilize at lower levels, following a significant decline, right? So we basically could align that with the bear market, right? We see market sentiment is extremely bearish. Everybody who is a casual observer tends to move away, and specifically to crypto. All the people who were excited before, they go back to their lives, they go back to their jobs. All the people who was hyped on watching the podcast during the last bull run, they have found other things to do. They're watching all kind of nonsense like Christmas lists and one kind of, listen to me. Anyway, but what is happening during this period is that what we like to call smart money, right? Sometimes as institutional money, sometimes as people who've been in this space a little bit longer, sometimes as whales. That is when they actually start accumulating their assets at lower prices, right? Obviously, people who doing technical analysis, they can see how undervalued certain assets are, and that is when they start really feasting, right? As a result of that, price movement is pretty flat, because even though these smart money are accumulating, the people who have been panicking, waiting, hoping for something to turn around, they see these little ticks as an opportunity to get out, right? So that's when people who kind of held on, who didn't really have the conviction, they end up selling oftentimes at the lowest points. But we tend to see low volatility, low trading volumes, right? Then we have the markup phase. Excuse me. Clearly need a drink. So prices start to rise a little bit more steadily during the markup phase. We see a little bit more positive news, in improvements in market sentiment, and we see a little bit more a growth in confidence in the market, right? So we see more investors starting to enter the market, people who may have been sitting on the sidelines for a little bit, they start getting a little bit more involved, entering piece by piece. This includes some early retail investors, right? We see the people who are the technical analysts, the momentum traders, they start to take positions, they start to take advantage of the little movements. We start seeing higher highs, higher lows, of course, increased trading volumes as we saw last week. Even early this week, we also see rising volatility. So we see some 2% moves, some 3% moves in both directions, but we still kind of ranging between that kind of boring period. And that's actually the period that we are most likely in at this point in time, right? We see minimal breakouts in terms of, getting past resistance levels. That's how we get to those higher highs. And then we see those resistance levels become support levels. And that's how we see the lower lows come into play. but it isn't that parabolic move that everybody is waiting on just yet. That comes in more the distribution phase, right? And this is where we see prices reach new highs, new all-time highs. The market becomes euphoric. The media coverage is, everything is good news, right? Public interest peaks. Google searches go off the charts. Everybody want to know how to get into crypto, how to buy Bitcoin, how to get into meme coins, how to do this. What's the next big meme coin? What is, the dog, the cat, the monkey, the worm, wherever it is, right? The politician. And we see smart money, the same people who were accumulating during the initial accumulation phase, we see them starting to take profits as the market goes up, right? They're not waiting, trying to predict the top, but they're taking profits as the market goes up, right? We see retail, right? We're not talking about the initial retail investors here, like you and me and people who've been kind of paying attention. We're talking about those people who've been sitting on the fence, bad talking crypto. Those are the people who start rushing in at this stage, right? They fly in and they start driving price action because, of course, everybody at this point sees the movement and fear of missing out. FOMO is kicking in hard. Your uncle, your brother, your cousin, everybody who knows that you've been involved in crypto, all of a sudden they started blaze up your phone, right? Now, price action is going crazy, right? We're seeing some big dildos, some major candles, and then we're seeing some major pullbacks as well, right? Because the volatility is just going crazy. Frequent spikes, frequent drops, trading volumes super high, whether it be positive trading volumes with buys or negative trading volumes with sells. We've seen green candles, we've seen red candles, but big ones. And I think at this point is where everybody gets kind of excited and confused, right? No, but most people either think it's going to go on way longer than it's going to go on or way shorter than it's going to happen, right? It's very, very rare that you see someone or a wide cross section of people predict the top of the cycle during this distribution phase. But what happens next is the part that everybody hates, the part that everybody tends to get trapped in because nobody is sure that you're in this particular phase until sometimes it's too late, right? And that is the markdown phase, right? So prices begin to decline. Sometimes we think it's just a market correction, it's just a step back to keep going higher. But then we start seeing the negative news coming, right? We're starting to see fear start, not fear of missing out, but fear, FUD, fear, uncertainty, doubt, starting to dominate the market sentiment, starting to dominate the news cycle. And this is where most times a little too late, panic selling from retail kicks in, right? And everybody starts dumping. And you know what's the funny thing is at this point where we call them smart money previously starts re-entering slowly, right? Most investors at this point, or many investors at this point, experience significant losses. I mean, people's portfolios capitulate. We see lower highs, lower lows, increased volatility, declining trading volumes, and we start re-entering the bear market, right? And all of this sounds like some very strategic, aligned, technical, influence that is happening on the market. But the fact of the matter is, it's all human psychology. It's psychological factors that are playing their part on the market. The market and the movements of the market are just representations of the psychology of the market, or the perception of the market by its investors at any given point in time. So it's always interesting to take a step back and see why it is this cycle continues to repeat itself if we know what is to be expected, right? If we know that we're going to go through the 4 different stages, from accumulation to markup to distribution to markdown, then how is it that we continue to fall victim to it? It's because we as humans, unfortunately, we do not or have not yet learned to properly control our emotions, control our feelings, and we tend to be very, very reactionary as it relates to how we are impacted, right? So thing happen, we feel, we act, thing happen. We feel, we act, thing happen, right? And that's how it goes. So we keep moving from a place of fear to a place of greed, following what is considered to be herd behavior. I don't know why we do it. I've fallen victim to it myself, and it would be nice to be like, yo, I'm not doing that anymore. I'm gonna be the one who goes counter to the herd. But that is easier said than done. And I think that's why it's so important to set a plan in place before the activity that creates, or the action or the element that creates the emotion even takes place. So even when the emotion happens, you have a plan that keeps you grounded, that keeps you what's the word, aligned and focused, right? Because you've done your research, you've put your plan in place, and you're going to hold yourself accountable to that plan, right? Now, like I said, a lot of these things happen based on triggers, whether it be in the media, or through social media, or through influencers that we follow. And that's why, a lot of people have been critical about the crypto space, because we know that there is a lot and significant levels of manipulation taking place, right? People with a lot of value in the market are able to manipulate price action, and of course with that manipulate the emotions of persons who are following the market. And we know that the whales, we know that the institutions, we know that the media has a significant hold and a significant level of influence and responsibility. So I think it's always important for us to keep in mind that there are forces that are seeking to manipulate us out of our money. I mean, like I said before, this is not something new. We've seen it during previous cycles. This period of sideways movement followed by the parabolic movement. I mean, in 2015 to 2017 cycle, we saw the same thing. So after the bull run in 2013, where Bitcoin reached 1100, the market basically capitulated into a prolonged bear market. And from early 2015 to late 2015, Bitcoin basically went sideways, trading between $200 to $300. And then only starting late 2015 and continuing into 2016, we saw a little bit more upward movement in Bitcoin. Bitcoin then started to steadily rise, breaking out to the 300 range. And then that was early 2016. But by the end of 2017, we saw that parabolic move from the lows of 300 in early 2016 to the highs of 20,000, marking the significant top of the bull run, right? And then in 2018, 2020 cycle, we saw the same thing happen. Peak in 2017, capitulation. Following that, late 2018 to early 2019, we saw the range trading 3,000 to 4,000. Early 2019, we saw the climb starting to happen, reaching around 14,000 and in mid 2019. And then after another consolidation or another significant pullback in 2019, 2020, because of COVID, we saw Bitcoin start its march all the way in late 2020, like November, December 2020. We saw the march from 11,000, 12,000, 13,000, all the way up to 64,000, 69,000 in certain cases in April 2021. And then the fall off again. So what we've seen is that despite the fact that the sideways movement seems to happen and almost lull us into a sense of nothing is going to happen, right? And then boom, we see that parabolic movement all the way up to the significant highs of the market. And it usually happens in, I would say, a 12-month period where we go from doing nothing to, shooting the roof off the market and then falling off the other side. So for those of you who are concerned, who are wary, who are nodding off, who are bored, who are falling asleep, I would say to use this period of sideways movement, this period of boredom, to really reflect on your portfolio, to reflect on your plan, reflect on your ideologies, reflect on the areas that you want to really participate in, and start taking your nibbles where you can, because when that parabolic moment happens, when that moment of euphoria happens, it is going to catch you by surprise. And you don't want to be one of those guys jumping in late because of FOMO, because you didn't listen to the Crypto and Cognac podcast show, and you get caught with your pants down, running out to the toilet, tripping over yourself, full of shit, and missing on this opportunity. Shout out to Bitcoin Moses in the chat. Steve-O, what's up, man? So, like I said, this is not financial advice, but the boring period of the bull run is usually the last great opportunity to get some buying in before euphoria, before things really heat up, and then you're stuck in between a rock and a hard place, wondering if it's too late. Should I wait? Should I wait for the pullback? Am I gonna get back in? Am I gonna see under 70,000 again? You're waiting, it's 90,000. You're like, damn, I'm gonna wait for it to pull back. It must have a pullback. Next thing you know, we at 100,000, we at 120,000, and you're now trying to get in, And that might be the top. You understand? 110 might be the top. You understand? So I would say for me, what I am trying to do, whether it's $1, whether it's 10 cents, I'm trying to get a little nibble in every single week, because I know that this moment, this boring moment, is not going to last forever. And until maybe the next bear market, I may not have these types of opportunities to get involved. Obviously, there are other things that impact what happens next. You know, the macroeconomic factors, community sentiment, regulatory environment. We know we have an important election coming up in November in the United States. We know that emerging trends and technology plays a huge part in what happens next, whether it be AI, machine learning, all these different things. So, as always, nobody have a crystal ball. Otherwise, we'll just, use it. So, still do your own research, assess risk from your risk appetite perspective, and yeah, get involved when you can, or when you're comfortable, I should say. Yeah, let me just check in on where we are. So when we started the 10K fund, it worked out outside of what we was gonna be just gambling in the meme coin market. We ended up with I think it was like $1,210 USDC. Stephen, correct me if I'm wrong. And as of right now, our portfolio is up 13.13% over the last 2 weeks. We are standing at $1,363.45 in the kitty, and we're going to continue to watch it, right? Remember, the goal is to see what this does over the next 12 to 16 months. I think we're going to start maybe getting out around July next year. July 2025 is the period I have earmarked to start divesting. Yes, Stephen, I know we started with $1,250, but we didn't use the whole $1,250. We left like $40 just for gambling in meme coins, and I didn't really share any of those particular meme coins because I don't want to be promoting a meme coin specifically. That side of the fund has been doing horribly, of course, probably down to like $10, $15, but the more safe bets, safe in inverted commas, they've been doing well. We are up to 1,300 and something. I'll post it on Crypto Caribbean's Instagram for you guys to see, and maybe on the Twitter as well. But in the meantime, we keep going. Next month, we're going to put in another $100, and we're going to probably just split that 50% Bitcoin and 50 between, I guess, Solana, Ethereum, and some of the other larger cap alts. And each month we're gonna invest another $100, and we're gonna see what that does for us by next July. DCA is the name of the game, guys. I say it every week. I say it all the time. I truly believe this. The adoption of blockchain technology and cryptocurrencies as a form of payment is inevitable. Adoption is inevitable. What are you going to do about it? Are you going to be one of the late bloomers? Seek out the information, right? As always, I love you guys. 𝐿luminati out. Guys, be blessed. Stay safe. Do your research. Love. 𝐿luminati out.